All right, everyone. Welcome once again to the Faces of Business. I'm your host, Damon Pistolka, and with me today, I am so excited because we got Jason Kruger from Signature Analytics going to be talking about creating financial clarity. Welcome, Jason.
Thank you, Damon. Appreciate it.
I'm really excited to talk today because, man, your depth of experience and the stuff that you guys are doing today, I'm just excited to cover it and go and take a deep dive into how you're helping people, some of the things you see. I mean, you guys have been in business quite a while at Signature,
Yep.
and you had to have uncovered some real gems over the years.
Oh yeah, we've seen some good stuff. Many times we come in after the real fun stuff or the scary stuff has already occurred, right?
Yeah.
We've come into situations where there's been significant fraud after the fact, and we've had to work through those situations. That's not ideal. We want to work with business owners, obviously, to make sure that they're on track and can help with educating them and becoming more sophisticated, so they have clarity that ultimately is to achieve their goals. Same thing you're doing. It's what are their goals, and let's work with them to figure out how we can help them to achieve those goals.
Yeah, good stuff. Well, Jason, let's talk about your background because you started out in public accounting, and I'd like to just kind of walk us through that and some of your experiences there, and kind of how you got where the Signature Analytics idea came, and then moved to there.
Yep. Yeah. So I started my career in the late '90s in public accounting, as you mentioned, on the financial statement audit side, and so I felt that accounting would allow me to get into business, would allow me to see the foundation of what I felt the foundation of business was. If you know the numbers, you know the business pretty well. At the time, I thought I'd get my CPA in 2 years and go conquer the world. And after 2 years, I realized I still didn't know much of anything. And I just continued to learn. I started my career with a national firm called Moss Adams. They're a big firm nationally and regionally, especially I think in your neighborhood. Yes. And then after a couple of years, I went to Deloitte & Touche, which is one of the big four companies. I wanted a bigger SEC experience. I got that, and then I realized I actually enjoyed the mid-market better. So I switched over to servicing mid-market companies. Spent almost 10 years in public accounting and working with the small mid-market. Even our clients at Deloitte, I could see that a lot of these companies were looking at accounting and finance as the necessary evil, right? I have to pay my bills. I have to invoice my clients and collect. I have to make sure I have enough cash in the bank to pay payroll. And I got to file my taxes once a year at the end of the year. And outside of that, that was kind of how they used accounting, right? And so what I realized quickly is that there was a gap, or that these companies they deserved better. They didn't have the right talent in place. They couldn't afford the top talent. And in a lot of times, they didn't actually need that top one person and that top talent to be. They need that one person in that role. They only needed a part of that person, or they needed multiple people in different roles. And so, leveraging my background back in 2008, decided to start Signature Analytics to work with the small and mid-market to support their internal accounting arm and finance arm of their business. For a couple things. One, it's business owners need peace of mind, right? They need to be able to go to sleep at night knowing that they have cash, they can meet their obligations of paying their bills, and their invoices are going out. So that's the peace of mind, making sure that the day-to-day activities is going effectively. The second would be visibility into the financials. As businesses grow, they start to have conversations with third parties like yourself. They're bankers, investors, and the first thing they're going to ask for is financials. So we want our clients to look credible, and we also want to give them the visibility into their business so they can make decisions to achieve their goals. So that's a 20-year snapshot in about 2 minutes. I'm happy to go anywhere you want to go from there.
Yeah, I'm excited to get into this a little bit more because, what were some of the things that you learned in the public accounting that surprised you? That you got into
Mhm.
it and you went, "Wow, I would have thought," and it was,
Yeah.
or you went, "Wow, this is really cool."
Yeah, no, it's interesting because I think being in public accounting gave me exposure to all different types of companies, size, industry, different types of business owners, CEO, executive teams, and the much larger companies, larger public companies, they are obviously much more sophisticated. They have all of their policies and procedures documented. They hire individuals with significant experience who have been through the corporate structure. The small and mid-sized businesses, a lot of these businesses are being run by first-time entrepreneurs, first-time business owners. They don't have the resources in place to invest in the corporate structure like these
Mhm.
bigger companies do. And so, from an outsider's perspective coming in initially, it was a little bit eye-opening to see how, really and realize, and we see this all the time now, and now it's just commonplace. It's a lot of times this is the Wild West, right? It's, hey, we have a great idea, we have a great business, and now let's go figure out how to grow it and make money. And so there's also a lack of, and we hear this all the time in our industry. There's a lack of talent in finance out in the marketplace right now. The volume of individuals that go into accounting is decreasing every year for a career, and so there's a real lack of talent, and the companies in that small and mid market are the ones that are really suffering from that. Accounting, I can see why an 18-year-old wouldn't think accounting is exciting. I didn't personally get into accounting to do accounting my entire career. I got into it to learn about business and to see where it took me.
Yeah. Yeah, and that's true because the the public companies obviously they have to meet expectations, give good projections, otherwise it just ruins their credibility. But you're right, and you think about some of the over the last time since you started Signature, how it's changed from much longer term established companies to now you think a SaaS company, they could get started, they could get a big round of funding and hit the
Yeah.
ground really hard in 24
Yep.
months.
Right.
And it is literally the Wild West because they're hiring people so fast and money's coming in
Yep.
and going out and multiple. It's just crazy how
Yeah.
that's probably changed for you.
Yeah, what we see too, a lot of companies that get that capital infusion, the first thing that, depending on who's bringing in that capital, they may want to bring in, or have a say in the management team. So
Yeah.
they'll bring in a very strong management team, but then there's nothing below them, right? They might have this high-powered CFO with a low-level bookkeeper below them, right? And
Yeah.
so those are actually fun individuals to work with because um, they're aligned as a management team as to where they want to go. They see value in our services, and we can
Mhm.
come in and really help them to build out that function, build out that portion of their back office to help them, really take business to the next level.
Now, that we're gonna get into that because I think that is one of the things that a lot of smaller business financial teams, ownership, leadership teams, whatever you wanna say, really miss in what they could get from financial information if they used it or had it more available and quicker and all kinds of things. We're going to get into that in a minute, but you hit a couple things that we were talking about now that we were talking about before, and you hit a couple points as we come into this. In these Wild West type situations, what are some of the telltale signs of problems when you go, we should get this is hey this is
Hmm.
getting above our pay grade or whatever, or
Yeah,
outside of our comfort, or not of our comfort but our abilities.
yeah. I'd say in this environment, it's always cash, right? Cash is king. If
Yeah.
cash is inflowing like no other, that covers a lot of issues, right? Covers
Yeah.
a lot of problems. as soon as seems to be some level of cash flow challenges, and a lot of times they're unexpected. I've talked to a number of manufacturers, and I know you have a lot of experience in manufacturing.
Yeah.
Right? I've talked to a number of manufacturers, and they say, "Hey, look at my income statement. Look at my P&L. Look how much money. Look how much we're making. Why do I have no cash?" Right? And I say, well, there's one of two reasons. One, your financials aren't right, or two, your cash is actually on the shelf over there in your warehouse. It's in its inventory, right? So your cash is inventory. So how are you managing your inventory processes? How do you know what's your overall process on buying inventory? What's your sales cycle look like? Manufacturing companies have it the most difficult as far as managing cash, and that's why establishing a banking relationship is so critical in that industry as well. And you also have collateral through your inventory to make it easier as well. So I'd always say cash is by far the most challenging. And then the business owners that start to move beyond where they're currently at and have to start providing their financials to third parties. And we talked about this, I think, before we jumped on too. It's a company that says, hey, you know what, I need financing. I need to bring in an investor. I need to I need to take advantage of this, even if it's this tax credit that might be out there. And the first question that they get asked is, send me your financials. And if they send financials that don't make sense, then they're not going to get very far. And so typically those are the initial signs that that they're ready, or that they start to realize the value. Beyond that, there's so much more beyond that though too, because as businesses grow, having the information in front of them is critical, because margin in a business is everything, right? It could be if you're a manufacturer or even a service provider. And if you ask a business owner, hey, what's your margin? They say, well, it's actually pretty good. It's 53, 54, 55, between 50 and 60%. Well, that's a huge spread, right?
Yeah.
And so what we want to do is be able to identify that and nail it down to the percentage point. And then how can we actually break that apart by product line and by service line? Because then you can really focus on which product lines are more profitable, and you could really look at your pricing and your costs. And what we do a lot of times is say, hey, how do I improve my margin by 1 or 2%? And that could be through pricing, that could be through how I cost my product, or how I purchase my product or my services or whatever I'm doing. And if you're a $10 million business, 1% is $100,000 to the bottom line. That's a lot. That's a lot that's a lot of additional profit to a $10 million business. 2% is 200,000. So it's significant. And just giving visibility to owners, I think, opens up a lot of eyes. And then you have something to work on, right? You say, okay, hey, great. Now let's work on this, and let's then measure the results and see what's happening. And you can make very quick impact for these businesses. And I know I'm speaking up your alley. I mean, I know you do.
No, this is great. I just wanted to let you talk because it was funny, because I actually had written down that very thing that you said, because I don't know how many times I have had worked with business owners that hey, we're growing really good, but we don't have any money in the bank ever. The cash is always short. And then you do the exact same thing you said. It said, well, look at your inventory as a percent of your revenue 12 months ago, and you grew a lot. Say you grew whatever, 25%, but your inventory grew by 50%.
Right.
That's where your money is setting. Just like you said, it's either in materials or on the shelf and finished product. And and
if you're leveraging a line of credit, you're actually paying interest on that inventory that's sitting on the shelf, right? So that's why managing inventory to a good level is so critical.
We actually had a number of years ago now, we had a client that liked to buy inventory. And the business was pretty profitable, and it was very hard to slow that train down. And but it is, and it's
tough because sometimes there's an opportunity cost, right? They want to have an inventory just in case XYZ might happen. Or I know a lot of companies have inventory on their shelves right now because of the instability in the supply chain over the
Yep.
last few years. And that's not their fault either. So now's the time. A lot of companies have excess inventory. What's the plan to bring that down?
Yes.
And whether it's sell or liquidate or whatever it is, to get that to the right level. So there's opportunity right now for these businesses that have extra inventory to actually generate, and they've survived to
Mm-hmm.
generate, some good cash because they've already paid for the product, and now they're going to get some revenue out of it if they can get that down at a good clip.
Yeah, I was actually talking to somebody about that a couple of weeks ago. We were doing the same thing again. What's your revenue the percent of inventory that you're holding compared to your revenue? And it had gone up. The revenue,
Yeah.
the inventory has gotten too high. And we were talking about, it's like, hey, you've got all these products and they cost you $20. Yeah, we normally sell them for $38. I said, why not sell them for 30?
Yeah.
Why not sell them for 29? Well, that's lower than we normally sell them. I said, but yeah, you're telling me you're short cash, and this is an item that you've got plenty of.
Mhm.
Run a sale, do something.
Yeah.
Like you said, turn that into cash, and then you have cash to do the other things you want to do in the business.
Yeah,
So
exactly. Yeah, there's a lot that
so
goes into
clutch.
those decisions, obviously, and so
Oh yeah.
sometimes and then it's, hey, should we sell 30 or 31 or 32? And so a lot of that goes into that. Yeah.
Yeah. Yeah. So as you over the years now, one of the things that's really changed the way accounting works and cash management is the amount of electronic transactions that we have anymore.
Hmm.
I mean, because when you started, there were still a lot of paper checks going back and forth, or
Right.
a few wire transfers, but a lot. So really, how has both on the orders, the invoicing, the payments, the billing, how has that really changed the way the accounting works and the speed of accounting?
Yeah. Well, it's significant. The biggest challenge, I think, in the small and mid-sized the business market that that really we're talking to is um, that is getting the system set up in order to operate effectively. And so and it's so expensive too. They can be so expensive. So to implement an ERP, right? And so
Yeah.
you start with QuickBooks, and QuickBooks will do certain things. So then you have to bolt on other systems to be able to do some of the things that you do. The systems, then maybe if you're in manufacturing, QuickBooks doesn't work very well at all for that. So you bring in an ERP system, and if it's set up the right way and you have the right processes and the team knows how to do it, it can be fantastic. If it's not, then that's when the team starts, having the side Excel spreadsheets on the side, reconciling certain things, and you can lose a lot of efficiency that way. At a minimum, in my opinion, nobody should be cutting paper checks anymore. There's very cheap, simple solutions, even for the smallest companies like a bill.com, where it just automates the process. If a check needs to be sent, they'll send it through their process on your behalf.
Yeah.
And it enables the approval process is very easy as well, to make sure everything's approved effectively. As far as just going back to your original question, the systems are fantastic, but it really has to be set up effectively. One of the first things that we do with all of our clients is we perform an assessment of their accounting and financial environment, and that includes their systems and their technology. And so we map all of that out. And so when we do the assessment, we look at people, their processes, their technology, and the reporting infrastructure. And that we're talking about the technology piece right now. So we map out everything that they currently have, how it's being used, what's working, what's not, what's interfacing effectively, and what's not. And then we come back with our thoughts on a recommendation. And now, obviously, if everybody had unlimited funds, the recommendation may be different than the rest of us. So we
Yeah.
have to work within the parameters of where the company is and what's in their best interest now. and then what's, something that we can strive for into the future. But at least we can put some quick wins in place to create some of those efficiencies. And so that's a critical piece of what we really look at.
Yeah. Yeah. Because you spot those problems right at the beginning, or potential areas that you should address right away that give you the big bang for the buck or prevent
Right.
big problems,
Right.
and move on. And the most cost effective too.
Right.
Ah,
Yeah. I mean, what
awesome.
we're really trying to do is we want to make sure we define and develop the right solution for our clients. And that doesn't mean getting rid of their team. Technically, we're an outsourced accounting and CFO advisory service. It means evaluating their team, layering in our resources where it makes sense, providing financial leadership for their team, and building that plan through the assessment, and then executing against that plan. What we don't want to do is just jump in and just start, what I call in quotes, doing accounting, because nobody really knows what that means or is, and the bills start racking up and nobody knows what's happening. So build that plan, make sure you understand the environment, and then execute.
Yeah. Yeah. Great points. Great points.
I think
So,
accounting and IT are like the black holes of business, right? Like nobody
yeah.
understands what's going on.
Yeah. Yeah. Well, I mean, in accounting, you understand, well, both of them really, but you understand when they're not working. And
Right,
that's the point that everybody goes, "Oh, there's a problem. It's not working." When it's working, no
right,
one even thinks about it.
right,
And
exactly.
the thing that I really enjoy as I get to work with clients, and we're working on, improving their businesses and getting them running better, and building value up to the exit point, is some of the clarity. And we'll talk about that in a moment. Some of the clarity you can get by not just saying, "Hey, we're sending out our bills like we should,"
Hmm.
but getting to the points to where you're really going, okay, what do we have in the 0 to 30 day bucket? What do we have in 30 to 60? Do we have any over that? And how does that look from last year or last week or
Hmm.
last month? And as we grow, how is that as a percentage of our overall sales? So we really can understand the kind of knowledge that gives us about, are we really running the that part of our business better or not, rather
Right,
than going, well, we've got $1 million outstanding, so that's pretty good, right? Well, that
right,
$1 million could be all over the
right.
of age, and it's just so much fun when you can really start to think about, okay, we're a growing business and we need cash, and if we can take 5 days out of our cash cycle somehow, that
Hmm.
would be a tremendous amount of money that we have in the bank now to be able to fund the growth or whatever we're doing.
Right.
And you talk about financial clarity. What are some of the things that, and this is an example that I see all the time that we love to do, is to around cash and around just the clarity you get from really understanding your financial information. What are
Hmm.
some of the things that you see your clients going, aha moments after working with you a while, or
Yeah.
things that they say?
Yeah. So there's the cash flow piece that you talked about, that you mentioned, is critical, right? Serve with professional service firms like ours, for example, it can be even easier, right? So it can be as much as, hey, why don't you take a deposit up front, or why don't you take a bigger deposit up front, or why don't we invoice um, twice a month instead of once a month, and why don't we, instead of making terms 30 days, why don't we accept or process via ACH or credit card with shorter terms? And now credit cards and others, there's a fee associated with credit cards, so be careful. We always prefer
Hmm.
ACH, obviously, but it's amazing the impact you can have on cash flow very quickly. And a lot of business owners think, well, my they feel hamstrung by their customers, right? My customers will
Yeah.
never let me do that. Well, maybe start on new customers and see how they react, right? And what I found out over time, at the beginning, 15 years ago when we started, I was very scared too. We had 30-day terms, everyone paid by check, collections always collect and everything. And we've tightened that up, and with how we've done that, with what we do now, our cash flow improves significantly, and the
Mhm.
cash flow of these service-based companies can improve significantly too. And you realize that business owners, if they value your service and they you build trust with them up front, the terms are not as big of a deal as we may think they are, and they're willing to do that because it may be what's the market is, right?
Mhm.
So, I think there's opportunity to be a little bit more aggressive with contract terms with customers for cash flow. That's a big one. And then the other piece is really having processes in place so that you have an actual AR process and you have an AP process, and instead of trying to figure out who I'm going to pay every single day, I always recommend just first let's make it once a week, unless we're in dire cash situation. We're trying to manage that daily or weekly or daily or hourly, right?
Yeah. Yeah.
Let's make it once a week, and let's have a process on how we pay and who we pay and what that means. There's opportunities to extend some vendors, and the others there's not,
Yeah.
and that creates some cash flow as well. On the AR side, there has to be a process on invoicing and then on collections, and that
Mhm.
has to be reviewed on a consistent basis. And so when we talked about the assessment, we also flowchart each of those processes out and say, okay, here's what you're doing, here's a best practice. With manufacturing businesses, it's a little bit different. They're typically buying the product well in advance of when they actually receive the cash from their customer, right?
Mhm.
So then it's how do I tighten that up a little bit based on the timing of when I buy, what the terms are with my vendors, what the terms are again with my customers, and then uh, what I would encourage, if you don't have a banking relationship, get a good banking relationship whether you need it or not right now, because there's a lot of
Mhm.
value even in higher interest rate times to leverage that for growth.
Mhm.
Um, so those are critical from a cash perspective. From a financial reporting perspective, I think it comes down to um, one, a budget in my mind is very important. A lot of people do a budget. Hey, we did a budget, throw it on the shelf or in the drawer, and then never look at it again. Well, a budget
Mhm.
really sets expectations and comparing against that budget. And you talked about trends, right? Like really understanding the trends of your business over time based on what you thought it was going to be is critical. And then you break it down into revenue and cost of goods sold and your margin we talked about before, and then all of your other costs, your SG&A or your
Mhm.
selling, general and administrative. And we've talked a lot with a lot of clients. We applied this to ourselves this year as it relates to, we call it weatherproofing your business, because interest rates are going up. There's a lot of uncertainty in the market. There may be there's potential for a recession if we're not already in it. So what are you doing to prepare for that? And what does that mean? And there's different ways that you can look at your business from a revenue and a cost of goods sold, an inventory perspective, cash flow, and also those other expenses that can really make a big impact. And the answer isn't just cut everything by 20%. You may want to invest in some areas of your business because you can take
Mhm.
advantage of market share, but other areas there's opportunities for real cuts. So.
Mhm. Yeah, that's true. That's true, because there's weatherproofing your business. I like that term. I like that term because it's there. I mean, because you look at across the board, there's people that are having explosive growth right now, and there's people that are really struggling. It
Mm-hmm.
just depends upon the industry and the kind of work they're doing. That's for sure.
Right.
The other thing I was wondering, and I've uh, seen this used a fair amount. How much do you think business owners should be using more periodic financial reports than their monthly financials?
Yeah. I'd say it depends. I think it's actually very important. So, well, I would say most companies should. Um, the best structure and consistent structure I've seen is number one, make sure you have a good monthly close process, and you can
Mhm.
produce a monthly financial package um, on a monthly basis. In the earlier part of the month, right? So that's another thing you asked about. Where do you usually see challenges? Talk to companies when they haven't closed their books for 3 or 4 months. I'm three or
Yeah.
four months behind, right? So they have no data, they have no relevant current information.
Yeah.
So that's critical. We want to make sure we have a consistency in our monthly reporting package. We can then build that out. So it starts with your income statement or P&L, your balance sheet. Want to make sure you have visibility in your cash flows, but then you start digging deeper into other areas of your business and really focusing on, breaking out revenue by product line and your cost of goods sold and your margins and your other expenses and the trends and what's happening with the trends of your business, right? So that has to be done, or absolutely want to do that on a monthly basis. Now, throughout the month, as you mentioned, I think it's critical to get ongoing reporting so you can manage your business throughout the month. Because if today is July 1, I won't get my July financials in best case scenario until August 5th or through 10th. And in most companies, it's the later part of August. So now you have a 45 to 60-day window where you're not seeing what's going on, right? So that's where flash reports are critical, depending on your company, revenue. Your system should be able to understand and provide you with daily snapshots or revenue reports. Real-time reporting can be critical. We use Microsoft Power BI for several of our clients and set them up on dashboarding that plugs into their existing systems and is able to get them the right reporting. For our business, we are a people business. So every day we're looking at our utilization of our team, where they are against their forecast and their goal hours. We're looking at our revenue trend throughout the month. What's happening? Are we trending in the right direction to hit our forecast? Because the last thing I want to do on July 30th is say, oh crap, we're not going to hit our forecast and I can't do anything about it. But if I know now, then I can move forward. I can say, okay, it looks like XYZ is happening, but there's a big need for some additional support, maybe on this client over here, or so-and-so is on vacation, so we know that their time is going to pick up, and so we know that we can manage that. That will be fine over here. That's just service-based, but in a high volume retail or online business or manufacturing, I mean, those reports are critical to understand how you're trending that month, so that you're sure that you can hit the goals you hit, and also understanding what your break even is, right? Hey, you know what? We're 30% below what I thought we were going to be. We better, really look at how we're going to conserve cash, because in 30 to 60 days, we're going to have a cash crunch, right?
Yeah.
So let's start that now versus, getting the financials 35 days from now and then saying, oh crap, we missed our forecast by 30%. Now what do we do?
Yeah, that's a great point, because if you've got one of those businesses where your cash cycle is something like that, where just say, I've got to pay for my product before I manufacture my product and I ship my product, and then I have to wait, just say it's 45 days, you could be 75 days out pretty easy. And that's where the hole is going to be. And I think that really, that correlation between what we did today and how it's going to hit me out here when the cash starts coming in, or that effect up or down is something people miss a lot because they don't understand the cash cycle.
Exactly. And that's why the accrual accounting is so critical. And I don't want to bore the audience by getting too detailed into accounting, but accrual in its simplest form, it matches the revenue you earn that month with the cost of the product or service that you incurred. And that gives you an idea of what your profitability was for that month and where you're trending. And so you say, oh no, we actually weren't profitable, or we were, we missed our budget. And so now we can visually see this. Oh, we need to make some decisions to right size this. If you're on a cash basis where you're just recording revenue whenever you book the sale or whenever you invoice, and you're just recording the cost when you buy the product, you may have recorded the cost over on the 3 months before.
Yep.
The current month, maybe you're not buying a lot, and it may look like you're very profitable, But the reality is, you're probably gonna, you're gonna see a decline and a hit in your business in the next couple of months that you may not have seen otherwise.
Yeah. That's a great point, because getting into the accrual based accounting is a must. Because it gives you so much more, like we're talking about today, clarity in what you're really doing.
Right.
So, man, so much good stuff. So much good stuff. I'm going through my questions here because you mentioned fraud and you getting pulled in behind fraud. What are some of the most common types of fraud that you're seeing today, so that if someone's
Yeah.
listening today, they could go, maybe I should check?
Yeah, absolutely. I think the most common is if you have one person that has too much control in the accounting department, one person that pays bills, one person that invoices, one person that does payroll. And a lot of small businesses, I mean, that's what they have, right? Because they can't afford to hire 5 people in accounting because there's no
Mm-hmm.
segregation of, and so they don't have what you call segregation of duties. You don't have the right controls in place. So if you have that, it's critical to bring in somebody outside of accounting in some capacity to provide a second level of review on what's going out. Even if it's the owner or the CEO or someone from the executive team, to be a part of that is critical. One thing, where I've seen the worst significant fraud actually is in a manufacturing environment where the one individual had significant control over the accounting function and everything that was entered into it. That person also had control over payroll and other information. The accounting was not, nobody really understood the accounting, and the accounting was not important to the owner. And so what happens is a lot of times inventory can become a black hole, right? The inventory balance within the company. You can massage the inventory balance to create whatever profitability you want if you're not tracking inventory appropriately, or if you're not doing a count, you're not truing it up.
Mm-hmm.
And so what ended up happening was this individual who subsequently actually was the issue was caught by a third party at a bank audit of all things. The individual actually ended up going to jail. But what the individual was doing was that she was submitting payroll, and she was claiming expense reimbursements through payroll to herself of significant dollar amounts, $10,000 a pay period, $20,000 a month, and the payroll, looked the payroll journal, and she was getting paid her salary. The payroll company never questioned it, which they probably should have. The payroll, her salary never really changed, but she was getting these, basically was tax-free expense reimbursements for with no support, nothing, right? And because she controlled all the financials, she was able to put those costs, in inventory or somewhere else that nobody could find or nobody could see. And she kept going along, and she did that for a couple of years until ultimately she got caught. And that is one thing I will say is it's in most cases the individual gets caught, but the damage it did to the company before that was substantial.
Yeah, and I've seen that as well. I've seen a couple times. Obviously, you see where the people get caught. There are very few times when they do not figure out what happened.
Mm-hmm. Yeah.
So that's good to know. But that is an interesting and innovative way of doing it. But I guess there's a lot of different ways that people have done it. I've seen where people will set up fake suppliers, and if you're controlling the buying and the paying of suppliers, you can do that. And then just if of course, on the businesses that carry cash, it's a whole different ball to deal with. But
I do know, I know an individual who also went to jail for exactly what you just said, creating fake suppliers and vendors and so on. So yeah, it's definitely out there.
Yeah. So what are some exciting things that you guys see that's happening in terms of accounting now? What are some new developments in the systems, the technology, the way people are doing
Yeah.
things that really is fun?
Yeah, it's we want to be technology forward. We want to embrace technology. Um, the more efficiencies we can create in the what I call the commoditized accounting, which is reconciliations and data entry, the better, because then we can focus on the good stuff.
Mm-hmm.
And so we're really focused on doing that. We have a lot of ways to create significant efficiencies in that and make it cost effective. The Chat GPT thing that came out, I mean, that's unbelievable. I think there's going to be a lot of good stuff that can be leveraged even in accounting.
Mm-hmm.
Financial statement trend analysis is one of them. Financial
Oh
state.
yeah.
So documentation of process documentation is another one. So there's a lot of efficiencies that can be had with leveraging technology. Um, we try to leverage technology even for the simplest of companies from our reporting perspective, and we leverage a custom reporting tool that syncs up with QuickBooks and NetSuite and other systems so that it spits out everything associated with their financial statements on an ongoing on a monthly basis, and then
Mm-hmm.
we will then go in and work through the what I call the MD&A or the
Yep.
summary, the trend analysis I talked about, and
Mm-hmm.
hopefully, and what we're looking into is hopefully we can even get that past that done more efficiently and more effectively as well, so that we can continue to create these efficiencies for our clients because accounting is looked at as a commodity in a lot of ways. So how do we continue to drive value, and how do we continue to create efficiencies in the areas that are the most commoditized?
Yeah. Yeah. Ah, it's awesome. It's awesome talking to you today, Jason, because you guys are doing some cool stuff and really helping these businesses in places they don't realize it yet a
Hmm.
lot of times. So um we're at time to wrap up here. So if people want to get a hold of you, get a hold of people at Signature Analytics, what's
Yeah.
the best way to do that?
Yeah, best way is our website, signatureanalytics.com.
Okay.
Real easy. You'll learn a lot of information about us there. I love talking to business owners. I'm happy to talk to anyone if they want to email me.
Okay.
The email is jkruger at signatureanalytics.com. That's JKRUGER at signatureanalytics.com. And anyone can call me too, 858-228-5643. I'm happy to talk to anyone. We have about 85 full-time employees as part of our team right now, and we're really
Nice.
looking to continue to add value in that market, in that small mid-sized business market. We work with companies all over the country, and if we can't help you, we're not going to try to fit a round peg in a square hole. And if I can introduce you to somebody who can, then I want to do that too. But I just love talking to business owners and hearing what they're going through and sharing any experience I can provide.
Awesome, Jason. Thank you so much for stopping by. And I want to thank everyone for listening today. I was reticent on the comments and stuff, but thanks so much. Thanks for listening. Thanks for being here. And Jason, thanks so much for stopping by and sharing some of your knowledge and some of the things you're seeing, helping companies build better financial systems, really get that financial clarity that helps them run a better business today, and ultimately too will help them create more valuable businesses well into the future.
Yep, absolutely. Yeah, thank you
Oh,
so much, Damon.
you bet. Well, hang out just for a minute, then Jason, and we'll talk. I want to say we're going to shut down